All right, once more, good evening, and you're welcome to our lesson on derived instruments, that is boom, crash, and volatility 75, as well as jump. If you are interested into trading those instruments, that is what we will cover tonight. Okay, the first thing to do is if you want to trade those instruments, you come to the Deriv website. You come to Deriv website. Those instruments, they are homemade instruments by Deriv. They were coded. They are known as synthetic indices, meaning it's not a real market. It's not a live market. It was programmed by Deriv. It's a homemade instrument to simulate the real Forex market. It behaves exactly like Forex trading, but it is a software behind it, and they are not influenced by news events. Okay, to get started, you just come to the Deriv website. You just come to the Deriv website. You can click on Traders Hub or log in. I'm logging in now. Okay. And this is the only broker that I know that offers these instruments. Okay. You come to the website. Let me log out. I rarely trade them. I don't really trade them, but for the sake of demonstration, I'll just show you. Okay. You log in with your normal Deriv account. Mine is protected with 2FA, that is two-factor authentication. That is, after entering the password, I'm required to enter this code before I can log in. Just a moment. Hey, that is, I have to enter a code on my phone. In this case, it's 393. Okay. No. 098393. Which is randomly generated by the Google Authenticator app. Okay. Then you come to Traders Hub. Once you're on the website, you navigate to Traders Hub. You scroll down to, if you're using a phone, you should switch to CFD. You're going to find options there. And then CFDs. Under CFDs, we mostly use the MT5 account. That is where the MT5 account is. Switch to CFDs. And then you'll find them in most cases in the standard account. If you don't have a standard account for Deriv, you should just click open or get. You should get the standard account. In my case, I already have a standard account with a 2.5 USD in it. Then I will click open. This is the one for where you'll find those derived instruments. Okay. This is my server, Deriv SVG, and then Deriv, that's the broker, the server, then the ID, I'll copy the ID. If you don't have a Deriv MT5, or with MT5, it doesn't really matter, but you can simply download it down there. I already have an MT5, so what I'll do is I'll just download an extra one for the sake of demonstration. I'll download, it's not giving me an option to click. If you are using a phone, you can download it from here, App Store, Google Play, or AppGalley, or whatsoever. So in this case, it's not giving me an option to download. It's not a problem. I already have an MT5. So what I'm going to do is I'm just going to log in. I'll log into any MT5 that I'll find nearby. Are you following?
Very much.
All right.
Yes, we are.
All right.
Always.
Then to log into a trading account, we go to File, log into Trade Account. The server, it's, what are we given? What server are we given? It should be, you pay attention to the server name. Deriv SVG LL, no, Deriv SVG server, okay? That is the Deriv SVG server. Let's look for that. This is a BVI. We switch to, where is SVG? It doesn't seem to show here. If it's not showing, then you can, if your server is not showing, you just come to File, open an account, okay? As if you are trying to open a new account, and then you search for, but now it's showing, but just in case if it's not showing, you could just search for Deriv, you refresh it. So when you do this, it's like you are refreshing the search. Then we are here. SVG, that is my server. And then I'll click next. Connect to an existing account because it already exists. Then you just enter the login ID. I'm not sure of my password, but I'm gonna do try and errors. With my commonly used passwords, I should get it right. Let's try that one. This is SVG server, not server 3. We have to pay attention to those numbers. Let's try again. Try again. No, man. Okay, I'm through. Okay. So yeah, you simply just have to, once you log into your standard account, then you can show all, okay? You can show all. What you have here is a list of the instruments you can possibly trade. You have Boom 1000. You can simply drag it here. You see how they behave. We'll explain in the short time now. And then we have crash. And then you have volatility, a list of them, a number of them. And then there are some currencies that are mixed up here, okay? This is a combination of currencies and boom and crash, nicely improved server. Okay, so and then they keep adding to these instruments every time, okay? For now, let's start with boom, okay? Boom 1000. Boom, it have a few options. There is Boom 1000, then there is Boom 500 index with the same characters. Let's just give it time to load. And then we have, okay, so what usually happens with Boom, the reason it's so famous, Boom is so famous for spikes, okay? What usually happens is it usually drops for every minute. If you have to come down to the 1 minute time frame, their candlesticks are a bit weird. What will happen is every minute, it creates a very small candle, okay? And then later, the next minute, it creates a very long candle, which is called a spike, okay? Which is not in the common Forex, normal Forex setup. You will only see spikes during news events, but for this one, you'll usually see it here and there, spiking as if we have news. It's spiking as if we have news. And then what usually happens, the most important thing that I wanted to demonstrate, if you are trading boom and crash, the first thing we should know is their behavior on the stop loss. What will usually happens is, what if you are to do this? Since they usually spike, what if you are to sell somewhere here, okay? And then you keep adjusting the stop loss as it's going down, because it usually goes down with a lot of red small candles. And then when it spikes, it should stop you up there. It could be a very good platform for us to make money easily, right? But unfortunately, you cannot do that. Why? The behavior of stop loss is, if you are to sell here, and then you keep trailing your stop loss, you trail your stop loss until here. When this spike happens, this long candle, that is what is known as a spike. When this spike happens, this stop loss will be disrespected. As if it's a slippage in the normal Forex concept with currencies, it's slippage that usually happens during news event, whereby your price or your order is not executed at the price that you have ordered the broker to execute it. Due to the fast movement of price, it's carried to be executed to a certain level because the price is moving very fast. So the slippage, it's here by default on Boom. What usually happens is if you have to sell here, your order will be disrespected. This stop loss will be carried and will be executed to where that spike is going to end. In this case, instead of having your stop loss at that level, it will be carried and it will be executed at the tip. So they say, if you were to sell here and you have your stop loss here, somewhere here, when this candle spiked, your stop loss was going to be disrespected here, and then it will be executed somewhere there. So this is, if you have to set a stop loss of a $10 somewhere here, by the time this spike will happen, you are probably going to lose, let's say, a 25 instead of a $10 if you had a lot of capital in your account, for example. So the easiest way to do this, if you don't want to be a victim of the slippage, the default slippage in the Boom instrument, what you do is, whatever you are risking, you come to, if you want to risk a $10, for example, what you should do now to prevent or to save your account from surprises or losing more than you are risking, losing more than what you intend to risk, what you do, I see I have some messages in the chat room. Someone is saying he can't hear anything. Are we okay? Can you hear me?
Yes, we can.
Okay, good.
I can hear you now. I think it was just the network.
Oh, okay, good. Okay, what you should do is, if you are interested into trading this and you don't want to be a victim of those behaviors, you come to your Deriv website, Cashier. You navigate to Cashier, and then Under cashier, you come to transfer. So which of my accounts am I transferring from? On transfer, you want to get rid of everything that is in that account. If you want to risk a 10 USD, for example, you have to get rid of everything. So I'll transfer everything out. I only want to leave a 10 USD, meaning I have to transfer 2501.38. Okay, if my math is correct. Transfer, and then let's go back to MT5 and see how much is there. It's a $10. Okay, good. Now what you need to do is, if you are buying here, the way of trading it is exactly the same as we trade currencies. Most of us, we like catching spikes. If you want to be catching spikes, you should trade it on support and resistance and using the chart patterns that we already discussed on a lower time frame. That is where you catch spikes. So in this case, if you want to catch spikes, if we are to look for spikes, let's try to see if we can have proper setups. So in this case, if we're to be on the 15 minutes time frame, somewhere here, we could have catch these spikes. We see there are people that drop signals on the group catching spikes. So what you do is, in this case, this was a clear support in this case, though history always looks to be very smooth than the real trading. But in this case, this was a support, and then we had another support. This was another support. What you do is, when the price is here, you draw your trade line in advance. You only put a $10. So the moment the price reached at that support level, you backward, meaning you should only have the capital that you are willing to risk in the account. The moment the price lands at that support, you backward it. Okay. Meaning you press until the broker says you don't have enough money. So in this case, we are not expecting the price to violate this support level. We want it, the moment it lands on that area, we want it to spike up. That is the whole idea. So if it violates that level, then we are no more interested. So that is what is known as catching spikes. If you have ever heard about catching spikes, this is how the signals on that is generated. The moment, in most cases, we give it 5 minutes. If it doesn't spike, so if you have to buy here and it doesn't spike in 3 to 5 minutes, get out. You can be, maybe if you have to risk a $10, you can probably just be in a loss of maybe a $4 or a $5. But when it spikes, if you had to back on the $10, the moment it spikes, you'll be in a sharp profit, maybe a $30, $40. And if you have to hold a long profit and so on, you will be in good profit. So are we okay on how to catch spikes? How do we catch spikes? Let me just hear from you. What is the procedure of trading it? Mr. Black, let's give someone else. I know you can come last. I want the newbies. You are a pro. Those that are very, very new to boom and crash. What did I say? How do you get spikes?
You use support
Repeat,
and
say again.
that we learned about.
Okay, let's just speak. Lydia, just come through, then I'll repeat.
I'm saying, you said you use support and resistance and also the chart patterns that we learned about.
Okay, and what else did I say?
And if you put on a trade example for 5 minutes and the spike did not come, get out.
All right, thanks. Okay. So what I was saying, to get spikes, you use the traditional trading style of support and resistance. Okay. In this case, what happened here, this was a support, this was a support, this was a support. What you are going to do if you are to trade spikes, you wait for the third touch on the support. This was the first touch, second touch, third touch. It's like 1, 2, 3, 1, 2, 3 of that. Okay. This is a 1, 2, 3. When the price was here, you will be waiting for a third touch of this support level. The moment it lands on that support level, what do? What did I say?
Barcode.
You barcode. If you don't want a barcode, there's a way to tell what is the biggest lot you can take on that instruments, okay? To do the calculations of the lot, it's the same concept we're doing when we're doing a fundamental analysis. What you do is you come to the market watch. If you want to know what's the maximum lot you can take, you can always come to the market watch. We are on Boom 1000. You right click, then you come to specification. It will show you what is the minimum lot. We'll get to the lot size soon because the lot size, they do differ. They vary according to instruments. So in this one, if you are not sure what is the minimum lot, you come to specification. You come to volume, minimum volume, it's a 0.2. Our standard minimum lot on currencies, it's a 0.01. But these ones, they do differ. It's like they have moods. Each of the instruments is in its own mood with what is the minimum lot. Okay, the minimum lot in this case, it's a 0.2. What you do is you can test it with a minimum lot, and then always, let me accept that one-click trading option. Okay. The margin on it, what is the margin there? How many margin did it give us with the minimum lot?
$5.56.
5.56. How many positions can we enter on a $10 in this case?
Maybe 2 or 1.
2. It has to be 2.
I'm saying that too.
5.56 times 2 gives you what?
It's just one.
It's just
That's
one.
11.
It's 11. So meaning for us to enter 2 positions, we
That's
need
11.
about a $12 to say. Okay, so with a $10, you can only enter 1 position. That is how you know. If you had $100 in this case, you are going to take $100. The usual calculations is you take your equity or your balance, $100. We divide it by the minimum margin, which is 5.56. Then you multiply it by the lot size that we use. The same story that we're doing with fundamental analysis, 0.2. On $100, the maximum you can enter, it's that one, okay? The maximum you can enter, it's a 3.5 lot on a $100 account. So for a $10, it's only that one, okay? And then what you do is if you had a bigger equity, okay, you will barcode it and then you hope for it that it will spike at the third touch. If it doesn't spike in 3 minutes, you get out. What did I just say? How do we trade Boom? Someone to repeat?
So you draw your support line. We are trading Boom. So when it touches on the third touch, you enter. If, for example, you got maybe 20, then you enter 1, 2, 3, or if you got a 10, can only allow you to take 1 entry. So if you have 100, you barcode it. Apparently, you enter as much as possible. But if it goes below the support line, and after within maybe maximum 5 minutes, you close all the entries.
All right, thanks. Okay.
think you are muted, sir.
Muted. Okay, sorry. I don't know what happened. What I was saying is, we should not take it for granted that it's moving very slow to the bottom. What usually happens is it's like a psychological thing. So with boom, we are expecting spikes. When you enter, it's like a tortoise. But trust me, it can blow your account. If you ignore it and not get out in 5 minutes, you will hope maybe after 6 minutes, it will spike. After 7 minutes, it will spike. After 10 minutes, it will spike. Slowly, you will see it in a loss of a $3, loss of a $5, loss of a $6 until your whole account is blown. So the best thing to do is to do yourself a favor, be very mentally strong and get out if it doesn't spike. Otherwise, it's like, it's designed, since it's called boom, it spikes, but trust me, there are some time that it can never spike even after 30 minutes. You get it? So meaning, instead of you losing a $5, you will end up blowing your whole account if you hope that it will spike after every minute. So what you do is, if it doesn't spike after 5 minutes, what do you do? What did you say? What do you do?
Get out.
The entries.
You get out. Yes, it's like it's a psychological thing that we have to deal with. If it doesn't spike, then it doesn't want to spike. So you just give it 5 minutes, then you get out. Okay. And then you look at boom 500. Here we have boom 500. It's the same. The behaviors are exactly the same. We gave an example of support. If you are a trader that uses patterns like me, I like breakouts. So you can also apply breakouts here, but then still on the breakouts, you have to follow the support levels. Then that is where you place your order. You hope for it to spike. So in this case, mostly on the lower time frames, let's look for something here. We can't have it. The past 5 minutes, we didn't have a proper one. You can even go down on the 1 minute, okay? You can even go down on the 1 minute. If you can recognize a clear support, then you can do that. Here we didn't have anything. We did not have anything. You can even go down on the 1 minute to catch spikes. So we didn't have a nice one here. Okay, then let's move to the same concept. Let's see if we can find something on crash. Okay, before we go there, let's check what is the minimum lot size on boom 500. You right click. Where do you go after you right click? If you want to know what is the minimum lot size, what did we say?
Go to specification.
Yes, you go to specifications, okay? Okay, you go to specifications. Let's check what is the minimum lot size on boom 500. So you come here, boom 500. Specifications. Volume. The minimum volume is the same as boom 1000. It's a 0.2. And then we move to crash. Let's start with crash 1000. We drag and drop. We simply just drag it. We drop it on the chart. Then it will automatically replace. We check the minimum lot size. What is the minimum volume on boom 1000? No, this time crash 1000. Still a 0.2, okay? Then the behavior of crash 500, it's the opposite. It's actually the opposite of boom. So instead of it spiking, it's gonna crash. So if you have to come down to the lower time frame, you see what is happening here. It's like news in an opposite direction, okay? It usually spikes down. So if you have to trade it, it's the same concept. You use whichever strategy that you use, whatever that you trade. You just come here, you look for your support levels. In this case, if you have to have it right there, you are going to barcode it on the third touch. What we have here is this was the first touch. That was the second touch. You could barcode here. This could have worked out for you. The moment it touched there, it spiked. The fourth touch, it was not going to work. What we're going to happen if we follow the 5-minute rule, it's going to trick us, and then it was going to spike later. So, and then here, the good thing is, some of you could be wondering, can you trade it like we trade currencies? If you are catching spikes, you only trade it on a lower time frame, it spikes, you get out and so on, catching spikes, okay? But if you want to hold it, yes, you are allowed to trade and hold for days, like you hold currencies, using the normal strategy. In this case, if you are to look here, what we have here is, this was a resistance that have turned into support. When it's coming here to retest this level, you are allowed to buy the normal way that we buy. You wait for a 15 minutes candlestick in green, and then you buy, waiting for it to push up there. You are allowed to trade it the normal way on bigger time frames. You can trade it the normal way on any time frame if you wish, okay? You are allowed. So just that there are those that like catching spikes on smaller time frames, and then you can as well, like Mr. Blake was saying, he trades it more like any other instruments. And the good thing is there is no news event with boom and crash. There is no surprises of finding your account blown. So you just set your stop loss, you set your take profit, and then you sleep, okay? And then we look at crash, the other crash instruments. We have crash 300. You can simply drag and drop. We have crash 300. You right click, then you go to specifications, okay? The minimum volume on these, let's check the minimum volume. What is the minimum volume on crash 300?
1.
It's a 1 lot, okay? So if you are interested into trading crash 300, so the funny thing is, if you are trading with, if you are to trade these things, you have to pay attention to the minimum volume. Because if you are to trade 1 lot here, okay? If you are to trade 1 lot, let's say you want to buy whatever that you want to do, you want to buy or sell, it's not going through, it seems you are not meeting the margin requirement. If you are to put in a 1 lot here, not enough money, okay? Let's go and transfer maybe a $20, for example, or a $50. Let's just make a new transfer. We are transferring, let's transfer $50. Now we need maybe a 43 for us to make a 50. And keep in mind, you are only allowed to make 10 transfers per day. With Deriv, when you are transferring to your account, you're only allowed to have 10 transfers per day. So you have to know how to manage those transfers very well for the day. That is the daily limit, okay? That is speaking under correction. I haven't been transferring in and out per day, but it was a 10, maybe it's still a 10. Those that have been transferring can testify on that, okay? Once we have transferred, you come here, it's a $50, okay? And then if we are to sell, the margin, it's a 35, meaning you need big capital for you to participate in this instrument. It's a 35, that is the margin requirement for the minimum lot. Okay. And then if we are to look at it on a bigger time frame, can we identify those patterns that we usually know? Yes, we can, and we can handle it just like any other instrument. So if we are to be here, I'm seeing an uptrend, okay? I'm seeing an uptrend. What we had here, this was a downtrend from here. If we are to follow it, just a quick track. This was a downtrend, then the market took a break here. The market took a break somewhere here, okay? You could easily connect this one. So wherever it is, you could simply connect these ones. You see, that was a very nice a chart pattern that have indicated our usual reversal. So based on what we have learned, when we have this pattern, after we got this breakout, okay, after we got this breakout, the breakout happened here. After the break of that pattern, it was an indication that the price wants to go up. So on a retest, you will wait for a green candle. We could have entered here. We could have entered the buy at that level, okay? We could have entered the buy at this level, or if you could have missed this, you could still wait for that. When it retested here on this green candle, you could have entered a buy, setting your stop loss below at that level with a 1 to 2 risk to reward ratio. It's a normal instrument that you can trade applying our usual strategy. Okay, and then we also have the famous one, the mother of synthetic indices, volatility 75. It was the best synthetic indices to trade back then, especially during COVID-19. I made a lot of money trading volatility 75, but later on we started to see server updates, and then it's like they've been updating. Maybe they were losing a lot of money. So later on, like these days, it's tough. So it's quite tough to make money the way we were making it back then. Because back then there were only few, maybe 5 or 6 instruments, but they kept adding more and more as this year's. Okay, volatility 75. With the volatilities, we have to pay attention. For example, we have the normal volatility 75. Where is it? Here. And then we have volatility 75, 1S in brackets. When we are giving signals, okay? When we are giving signal, you have to pay attention if it's volatility 75 or 75 1S. The same with the other ones, 100 or 100 1S, 50 or 51S. They are different, okay? Volatility 75, we usually used to trade it purely on what we know, the basics, on chart patterns and supports and resistance, and we used to make a lot of money. But for now, it's not that profitable anymore. Maybe those of you that have been trading can tell me which one is so profitable for you from your experience. But what we have here is you can also trade it the same way like we trade Forex. Remember synthetic indices. This is a simulation of the real Forex market. It was coded or programmed to behave like the real Forex market, but it's running on software. It's not a live market, all right? Okay, so what we have here, if we are to have a look on volatility 75, if we can just have a quick visit, can you see how it's behaving just like any other instrument, like what we have here? There's nothing much. If we are to go on the 1 hour time frame, if we are to look for a signal, so this goes to all the other instruments. Let's just quickly look for signals. The normal way that we look for signals on currencies, okay? We'll drag and drop, looking for a signal. Let's start here. We have volatility 10. See what we have here. If you are to have a look at volatility 10, what we are having is we have a pattern coming up somewhere there. We have another pattern. I'm a big fan of patterns coming up somewhere there. So what we are expecting if you are to trade based on pattern is you are expecting a break to the bottom of the pattern, then you sell. So you can simply do this. The price was coming from here, and then it is currently in a certain pattern. So what you're expecting is you're expecting this price to break below here, okay? Then you can sell on a retest or immediately after a breakout if you are an aggressive trader. So, okay, you can expect a sell on this break, or if you want, you can take a bigger risk and sell on at the top there for a bigger reward. But the safer way, this is for a bigger risk with a bigger reward. For this one, it's much safer. So in this case, you can wait for a breakout there, then you sell, just like we trade normal currencies. Okay, and then we can have a look at, this is volatility 10. We can have a look at volatility 25. Let's see if there are some tradable instruments. no, if we have some trading opportunity, volatility 25, what do we see here? I can see a breakout to the bottom. What we have here is, this is the challenge of aggressive trading, okay? See what we have here. If we're to buy right there, what we have is a clear pattern formation. Just like Forex, sometimes it breaks, sometimes it behaves, sometimes it doesn't. So if we're to take an early entry, a risk entry, we're going to buy here, setting our stop loss below here. But see what could have happened. We could be some small profit and then the stop loss hit. So the safe way is you wait for a breakout to the upside down there, then you buy there. So in this case, that was going to be a losing trade, the normal way of trading. Then we move to volatility 50 index. Let's move to volatility 50 index. So the same for every instrument, the lot size differs. What will happen is if you happen to have, in this case, let's check what is the minimum lot on 51S. Minimum volume. It's a 4 lot. You see, the minimum volume on a 50, it's a 4 lot. Imagine if you left a 4 lot here, it's the minimum volume, and then by mistake, you go use the same 4 lot on a different instrument. You'll be in hot soup because that could be a times 40 or a times 400 of the minimum lot on that instrument, okay? So you have to pay attention to the minimum lot size or to the lot size that you are using on every instrument, okay? So what we have here again is, let's move to where we have volatility 50, volatility 75. We already visited this one. You just scan through the usual way that we scan through all the instruments. You drag and drop, you drag and drop. So like, for example, what we had here, the price was coming from here and then it formed a nice clear pattern right there that broke on the upper side. So if you were to buy here, aggressive move. Aggressive move is you're gonna buy here on the green button. You will have made a lot of money. If you had to wait for a breakout, you will also have. Let's please mute our mic. Okay. If you were to wait for a breakout, you were gonna buy at the top there, but it was not gonna reward very well, and then it could be some small profit and then so on. But the whole idea at the moment, we can expect a break from this bottom here. Can you see? That is a third touch that we are getting there. The price, if we have to just clear everything. So if you see this, okay? And then if you see there at the top. So what we are expecting, this is a reversal pattern in this case. The price was coming from here and then it created this rising wedge or whichever pattern is this one. So our expectation, this is a reversal pattern. Since the price was in an uptrend, if we get a breakout here, we can sell on that breakout or we wait for a retest, then we sell expecting the price to push down there. Where to set stop loss is actually tricky, but it's actually you to decide based on the pattern, on the market structure. Okay, you can set the stop loss right there. You target for a 1:2 or 1:3 risk to reward ratio. But the same patterns that we usually find in currencies are the same patterns that we have on the derived or the synthetic instruments. It just needs you to practice. Forex, you're not going to find a different Forex than what you are seeing now. This is Forex, okay? It's up to you now to just practice these patterns. It's up to you to put in the work to really trade. It's up to you to put in the work, to sit on your computer. You look for these patterns yourself. No one is going to do it for you. You have to do it yourself, okay? So what we have now is we are waiting for that breakout. And then where are we? Volatility 100. Volatility 100. The good thing is we have the normal currencies. This server, it mixes the normal live currencies with derived instruments. So if you don't want to switch from financial to derived, you can just trade on the standard, and then you will have everything in one basket, whatever that you want to trade. Then we jump to volatility 10, 1S. This one's, it behaves normal like currencies, okay? You just look for patterns, you trade it. The good thing, not to forget, the good thing is derived instruments, they operate 24/7. You can trade them even during weekends. They never sleep. That is the good thing. Our normal currencies, Canadian dollar, Japanese yen, it only opens, the market only opens Monday to Friday. But for the derived instruments, you can trade them weekends. If you are having a very busy schedule during the weekdays, Monday to Friday, you can make time during weekends to trade them. All of them, they will be open, jump, crash. You can catch spikes during weekends. That is the good thing of synthetic indices. In fact, that is what have made deriv very famous. Most people, they don't know that they can as well trade currencies with deriv, or they don't like trading currencies on deriv for whatever reason. Deriv is famous for these instruments. That is because they can as well trade during weekends, okay? So if you have a busy schedule, you have a chance to trade during weekends now. Then volatility 25 1S. Volatility 25 1S, the same behavior, just like any other instrument. If you are to look here, let's just try a bigger screen. If we are to look here, what happened here is exactly what you will expect in a normal Forex market structure. The market had that level, it had this level, clear pattern. At some point, I have a colleague that doesn't like to trade currencies. For him, is very good with these things, and he knows, or he believes they follow the market structure much better compared to currencies. You can easily predict it compared to currencies. That is the reason most people like to trade these ones, because there is no news, and for it was programmed that a support is a support, a resistance is a resistance. There are some times that it violates, but it's much more predictable compared to currencies. Okay, if we are to come here, see, the market was coming from here. The market was coming from the top, and then it formed, it was ranging, okay? After ranging, what happened? A breakout. You could have entered at a breakout right there. Or if you were to be here, that was a previous a support, and then it was broken. After a support is broken, it turns into a resistance. The next price, the price touches there, it's a resistance. When the price touches there, you can have sold, okay? It pushed down there, the same story here. When it touched there again, we treat it as a resistance. You will have taken a sell position. The same story, okay? The concept on synthetic indices, just to wrap it up, volatility, jump, and all other instruments, treat them just like currencies. Apply the normal strategy that you have. The only different that we have here, there is no news, okay? And then on boom and crash, they don't respect stop loss, especially when it spikes. The stop loss will be carried to where the candle is gonna end. And when it crashes, the same story, the stop loss will be carried. If you are in a buy position, it will be carried to where the candle is gonna end, okay? So those are the only difference. So otherwise, and you have to know the minimum lot size on each instrument. You can sit down, write them down if you wish. We had a list, I don't know where it is, where it was circulating on the groups. Write them down, write down the minimum lot on every instrument, or you can always double check. Otherwise, you'll be in trouble one day ignoring the lot sizes of instruments. But otherwise, that is what I had for you tonight on boom and crash. Hope you know their behavior, and you know there's no news, you know, and all that, unless you have questions on it. Or if there's someone that have a strategy, a good strategy, that if there's a specific instrument that you usually trade, and then on top of that, if you also have an idea on how to go about it and so on, you can share it with us, but otherwise you can trade it the normal way that we trade Forex. Comments, questions?
No, I just have a question regarding the specification.
Mhm.
The lot size, how is it indicated under specification? Because I'm checking, I'm not seeing anything on lot size.
It's indicated as minimum volume. See if you can find minimum volume.
Minimum volume. All right.
Yes. That is the minimum.
Maximum volume.
Yeah, that is the minimum lot size.
Oh, okay, okay.
Okay.
I have a question.
Uh-huh.
What is the difference between boom and crash?
Who can help us answer the difference?
Can I try maybe?
Yes, you can.
Okay. The difference is that the boom spikes upwards and then the crash spikes downward. As it says, boom, it's just an instrument like indices, all the other instruments, but in this case, it crashes. I mean, it booms, or it spikes upwards, and then the crash does the opposite. I think that is the easiest way to.
Yeah, that part I do understand, but then when it comes to lot size, there's a big difference. Like you can have a boom 300 or crash 300, different lot size. Like why that? Why is that?
Okay, like I've indicated, ne? We will not answer why are the lot size different on every instrument, because that is how Derek have put them. So for us, it's just to make sure we know what is the minimum lot size or what is the lot size for each instrument. But why are they different? That one, the reason for me, I don't know. So for us, it's just to make sure you are using the correct lot size. That is what I'll say. I don't know, maybe others can come through.
Thank you. I think I get it also.
Because
Right.
the odds are really against us as forex traders. This thing was made for these guys to make money from us. I think it's just a way of confusing the novice traders, the upcoming traders, because a lot of, I remember even myself when I started, I would grow an account and then use a different instrument. I used to like VIX 100. Sometimes we don't check the lot size, and then you are buying or you are selling at 0.5, and then the whole account is blown. I think, I think it's just a way of these guys to make money from us. There's really nothing specific in terms of what or why. I think so, yeah.
Okay.
Yeah, but the market is for market makers. So these guys want to make money from us as much as we want to make money through them as well.
All right, thank you so much for answering the question, Mr. Black. Any other questions or comments? Are we okay? Do we now know what is boom, what is crash, the lot size, and how to trade them?
Yes.
All right, good. All right, if there are no other questions, then thank you so much for your time. We will see you tomorrow, same time. Before we go, what topic did we not cover that you feel we should cover? Those are the topics we are looking for. Because the whole theory, we have covered it already. We are wrapping up with what we didn't touch or what you feel we should touch. What topic can we cover tomorrow? I should just have a look at the course outline and I pull any topic, or there's a topic that you want to suggest that we have never covered.
Technical
blocks.
analysis.
Which ones? Order blocks and which one?
Technical analysis.
Fibonacci.
Fibonacci. Okay. Technical analysis.
Yeah.
We have covered chart patterns. That is technical
Analysis as
analysis.
well.
Pardon?
Top-down analysis.
Okay, top-down analysis. Let me just take note of that. So for tomorrow, top-down analysis, yes, I can buy it. We have never touched it. Top-down analysis. Fibonacci retracement, Fibonacci tools, we have touched them unless you want a repeat, or maybe you are from a different intake, but I will write it down. Fib, mostly it's the Fib retracement, Fibonacci retracement, and then order blocks, okay? Order blocks, give me the topics. What topics as well do you feel we should touch? Technical analysis, I don't know what you mean by technical analysis, because technical analysis is the chart patterns that we have been using. I think we have covered that already. Technical analysis is the Fibonacci retracement. Technical analysis is the Japanese candlesticks. It's the indicators, Bollinger Bands, stochastics. That is technical analysis. Maybe give a clarification on that, but I think you just have a misunderstanding on it. Topics again, bring the topics.
Maybe can we also look at supply and demand?
Okay, supply and demand. It's just the same concept with order blocks.
Yeah, with order blocks.
Demand. Okay, which topics as well?
Risk management, maybe.
I think we covered that part, risk management. Risk management is simple. It's basically the idea of if you have $100, you should only risk a $10 at a time. We mostly covered it during news. How do you calculate a $10? You go in with a small lot size. After you go in with a small lot size, you check what is the stop loss. If it's a $2, then you simply calculate that if you are risking a $10, you should only take 5 positions. That is risk management in short. We did that, I think. Did we not do that? How to know how much you are risking at a time and you deciding how much you are risking at a time. We did that, isn't it? But we can still write it down.
Yes, we did it. But,
yeah, that is risk.
I don't know why. I end up prematurely entering trades that I didn't plan well risk-wise. But maybe I'll work on it individual basis.
Okay, but I wrote it down. Risk management. What else? Okay, this is from you that these are the topics that you feel we haven't covered that we need to cover. If you remember any, you can drop it in the group. So in the meantime, I'll also go through the most important topics that I feel you really need to understand how does it work, and then we can take it from there. But this week it's for wrapping up whatever that we never covered, we're gonna cover it. All right. Otherwise, that is it for tonight. So we can
Sir,
yeah.
Sir.
Yes, Emiliana.
Sir,
Yes, Emiliana.
did we do live trading already?
Yes, we've been doing live
Did we
trading.
live trading already?
Live trading
Eh?
we did. Live trading, we have been going live on news, not live, but we have been analyzing before the news event. But then that is practical. You mean, did we do practicals? We did, but
Yes.
we did, but we did not do much. So we still have to do much.
Okay, sir.
Okay, but I wrote it down. What else?
Another topic, Mr. Cylinder, is
Yeah.
Entering. I want to be sharp at entering as well. I know maybe it sounds simple, but I think I missed that class a long time ago when you did, and I didn't work on my
Hello?
entries.
Yes, alone or entries.
Yes.
Okay, entries, when to enter, when to exit. Or maybe we
Yes, when to
should,
enter.
there is entries, they do differ if it's long term or if you're on lower time frames, sniper entries and so on, and barcoding, those tricks. Someone wanted to come through. Okay, Alex, I took note of it. Entries.
Okay.
I think it's Chris that wanted to say something. come through? All right. If there are no comments and suggestions, then let's call it a night. Have a good night ahead. We will meet tomorrow, same time. Thank you so much. Bye.
Sure.
Good night.
Good night.